So I'm glad that you made it home okay and that you had a good time.
Mm, Thank you so much.
Yeah. So yeah, might as well get started. Alexis, I am a local real estate agent over in Vancouver, British Columbia. Really excited to be here. We might have a little bit of a slimmer audience today, but we do put this up on YouTube, so you guys will be able to follow along at your leisure. And yeah, just wanted to do a really quick market update. We had our Rennie's market update this morning actually at my sales meeting. And right now, the Vancouver market, the inventory just remains elevated. The market right now, the sales are the lowest that they've been in like decades. And especially for May, because they had May's sales out and just kind of like looking at it year over year, it's definitely been lower than what it's been in previous Mays. May is usually the strongest month out of the entire year. There's only been two other years where May wasn't the strongest month. One of them was in 2019 and 2020. And because of COVID in 2020 and then 2019, because they were getting out of a little bit of a slump. But aside from that, we're just showing kind of where we're at with the market. And I mean, I get really excited when I say this. Like, I understand buyers are somewhat cautious right now in this type of market. But there's a lot of advantages to buying in this kind of a market rather than waiting for the market to get really hot. And that's, you have a lot to choose from. There's a lot more options than there have been in the past. There's also a lot of developers that are offering like a lot of incentives that they typically wouldn't. And interest rates, although I would say they're remaining relatively stable at the time, they're definitely lower than what they have been in previous years. And right now, there's just a lot of opportunity. I think last week I shared with you guys on the fly my most recent purchase, which is over in Burnaby Mountain called the Arbor, where I have a lock-off suite. There's a full-on lock-off suite. So it's a one-bedroom on one side and then a studio apartment on the other side. So I'm going to live in one side and then I'm going to rent out the other side when I exit the property in 1 to 2 years after I've put in my time. I'm going to rent out both. And right now, up on Burnaby Mountain, there's twice as many students as there are living spaces. So the demand is quite high. My presale has remained strong over the years, particularly even in this year. I got it for around 720,000. And that's for a one bedroom and a studio. A lock off is what it's called. So they're completely separate, two separate kitchens, two separate everything. The only thing that's shared is the middle laundry area. And, I showed you guys last week. So if you want to go to the YouTube channel, go have a look at that. I did have quite a few people give me interest and booked about 4 meetings that we've been out looking and we tied one up. So there's one left. And so if anybody is interested in that, I have another showing of that this week as well. So there's a lot. I work with Rennie's, the brokerage, and they have the largest market share for pre-sales, and developers are just like, they would love to do some business. Let's just say that. So it's a really exciting time right now. And especially in like pre-sales when normally you would need 20% down, they're like 5%. Let's go. So it's just really lovely to see opportunity for buyers when typically they wouldn't have thought that they would ever be able to buy. Right now, there's not only a lot of opportunity out there, the government's made it easier. So there's a lot of, I have my government grant glossary, as a lot of you guys know. I have my Rents to Riches program. I'm going to pop it in the chat, as we kind of proceed next to our next speaker and everything. But I also wanted to do a huge shout out today. One, I wanted to do a shout out to Michael for putting together, I don't know if you noticed, but there's an additional screen there with my QR code, helping me put everything onto YouTube. And also to Dylan Ross, who has been helping with me diligently as well, for quite some time on the backside. I know a lot of people don't see a lot of it. They just see me up here presenting, but there's a lot of people in our community that have been helping a lot make this present well and starting a YouTube channel and, helping me manage the community. So I just wanted to do like a really huge shout out to you guys today, for all of the hard work and dedication that you guys have been contributing to make this community alive. It does take a village to keep a community. And with that, Dylan, like I just wanted to, give you the opportunity right now. I know that you not only work so hard with our conscious community, but Dylan, I know that you do have a business yourself, and that you run. And I just love to give you the floor for a few minutes here to share what it is that you do.
Yeah, well, thank you for that. I don't want to take too much time. I know we're all here for Sam, but I'm Dylan I'm the founder of Deliver the Call Consulting, and I work in automation-driven revenue and operation systems architecture. So I help founders who feel buried in admin, follow-up, and messy CRMs by engineering automation and lifecycle systems that make revenue and growth predictable, from lead generation and capture to reactivation and retention. So most businesses already have the tools, but I design how those tools actually work together so revenue and operations aren't founder dependent or chaotic, freeing owners from $10 tasks so they can focus on $10,000 conversations. And then, so for me, the best people I like to work with are, founders that are scaling past six figures who are growing, but it kind of feels like their systems are duct taped together. So I'd be happy to have a conversation with anyone that's interested in what that sounds like. I'll send a message to the chat there with my email and my phone number. You can send me a text. Maybe we can talk about potential revenue systems work and maybe just leads. But I like also working with existing leads and clients where we can rework those and see if you can't get more yield out of what you've already invested in. So. Yeah, happy to talk more about that if anyone would like to. I'll hand the floor over to Sam here and send the message to the group.
Oh, amazing. Thanks so much, Dylan.
My pleasure. Thanks for having me.
Yeah, no, we love all of the support that you keep in there. And make sure to put it, yeah, you put it into the chat and then
Yeah,
also in our WhatsApp chat as well, so that
yeah,
people know what you do, because it seems like quite a few people haven't showed up for this meeting. So it'd be nice to just make sure that you dial everybody in.
yeah, for
So
sure.
yeah, that's great. Yeah, so everybody reach out to Dylan. He's been a tremendous help over this last year that we've been kind of, creating this. It started as the conscious crypto. And then we transitioned into overall, wealth strategies, investing consciously. And yeah, and you've just been such a really big support. So thank you, Dylan. And so yeah, without further ado, we're gonna lead into our main keynote speaker today. And so I was introduced to Sam more recently by a good friend of mine who's not on this call, but he's in the community. And I know that Sam works over on Nesbitt Burns in the private wealth sector, and he's going to be educating us on some different strategies that are more aligned for our community in the conscious space, which he's going to be sharing with us today. And we're really, really excited to see you and hear from you today.
Perfect. Yeah, thanks so much for the introduction, Dylan and Alexis. And I'm happy to be here and share screen first, just to make sure it works. So go.
Amazing. And I think we're going to be learning about ESG investing as well.
ESG is, yeah, that's definitely part of it, and responsible investing in general. Can everyone see that? The screen is being shared?
Mhm.
Okay, perfect. So my name is Sam, as they have gone into. I work for the Right Current Wealth Advisory Group of BMO Nesbitt Burns. That's really the wealth management arm of Bank of Montreal. And I wanted to provide our perspective and a little bit of the institutional perspective on what responsible investing looks like to us. And so that's beyond returns, because returns are one thing, but it is possible to feel good about the money that you're putting to work. And there are a couple different lenses and strategies we generally apply when we're doing that kind of thing. And at the end, I wanted to provide a framework for, okay, this is our institutional way to approach it, and how can you apply that to the personal side and managing your own investments? So first, what is responsible investing? It makes sense to go over the definition first. So responsible investing incorporates financial and non-financial analysis of company performance into the investment selection decision-making process. So in traditional financial analysis, there is a lot of opportunity to be invested in ways that don't necessarily align with your ethical or moral views. So if you think about some of the stereotypical examples of this, well, there are a lot of companies which have factories elsewhere in the world whose labor conditions are not necessarily very good. And maybe they've been litigated against to that end, or maybe they've gotten in trouble for, let's say, child labor or just inhumane labor conditions in general. That's one probably big way that companies run into trouble from a responsible investing side. Or, for example, companies that are involved with the selling of weaponry. So there are a lot of violent conflicts around the world, and it can be a profitable way to invest to buy the stocks of the companies that are selling the weapons and the bullets. But not everyone necessarily wants to be invested in those kinds of companies. And it's actually really easy to be invested in them by default. And that's an important part of what we'll go into, is that when you're invested in, for example, a broad-based index or a large fund, index fund like the S&P 500, well, often that's going to come with being invested by default in a lot of these companies that you might not necessarily know are even in there and that don't really align. And so what we're incorporating is non-financial analysis that will then make a more informed and sustainable investment decision. So in the responsible investing toolkit, I like to go into 3 layers, and each of them gets a little bit more involved. So you can start with ESG, which might be the least involved. That stands for environmental, social, and governance. Move on to screening and exclusion. And then the third and the most involved is impact. And then process is really where we would focus on how to take some of the strategies that are largely institutional level strategies in those first 3 and make a process or framework through which to apply those strategies to your personal life and your investment decisions. So we can start with ESG. Largely, this is a risk framework where it's an evaluation of the environmental, social, or governance factors in investment analysis and into the companies that one might be invested in, into your investment decisions and risk assessment. And the purpose, as NEI investments, who we use often for responsible investing, just because we find that that's an area where they really specialize in, is to reduce risk and uncover opportunities to improve investment outcomes by assessing a company's non-financial performance. The improve investment outcomes is really important here. So we are putting your money to work. This is not charity, and getting a return on the investments, even when your main focus is responsible investing, is still is the first and foremost pillar of investing. And so it's not a guarantee of better returns. There's no universal methodology for this. And it's not quite impact investing, which is a more involved layer. But really the best way to think about it is it's a risk framework where when you're thinking about the companies you're investing in, you want to make sure they're not on the wrong side of environmental issues or social issues or governance issues. And there is good reason for that. So if you look at why it matters, well, here are some historical examples of companies that were on the wrong side of that, and then an immediate impact on their stock price. So BP, the big oil spill, health, safety, and environmental concerns, that would fall into the E of ESG. And you can see the exact moment, the arrow's pointing at it, where it happened, and that's a 43% stock decline. That is not healthy for the returns of an investment portfolio. Same thing from the governance side. So either accounting fraud or just corporate governance for SNC-Lavalin and Adani, that's about a 70% decline in their stock price in general. That's not good for your investment portfolio. And for Philips, they had an issue with product quality and patient safety for a massive decline in 2021. So when a company like the ones we would use, the big asset managers, are considering ESG issues, it largely is a risk framework because they don't want a company that has a risk of something like this happening. So they're thinking about, okay, we're going to when we're thinking about asset allocation, our money is going to all these different places and all these different companies. And if we have an ESG evaluation and one of these companies is too risky because they might fail on an environmental standpoint or on a governance standpoint, well, then that's not someplace we'd like to put our money because it's too risky. And so again, when you're putting your money to work, ESG is the first layer of how one might do it responsibly, but it doesn't have to affect your returns. So here we have a comparison of just the broad-based S&P 500 index versus the S&P 500 ESG index. So that just applies an ESG filter where certain companies that maybe don't meet the standards for environmental or for social or for governance are not included in the portfolio. And the S&P 500 is in blue, whereas the ESG index is in red, and the ESG index outperforms it. So if you think about how this kind of chart is related to the prior one, well, companies that have issues in these spaces, they don't do well, and then that's affected here, where the normal index is outperformed by the ESG index. And an index fund, the best way to think about it is that just is a basket of stocks representative of the biggest companies traded on stock markets. And in this one, it's in the US. So this is comparing ESG US versus standard index, and ESG outperforms. So big focus there. One, it's possible to be invested in places that you don't necessarily align with if you're just in a broad-based index. And two, it does not necessarily need to reduce your returns to think about it and apply more responsible lenses to your investment decisions. So here's an example of an analysis, and this is at an institutional level again. So a big asset manager, how might they think about ESG analysis when they're thinking about a particular stock pick, a particular investment decision? So first, from environmental, there are always going to be certain key performance indicators, so measurements that they're looking at to evaluate whether or not the company is appropriate to invest in for the funds and for their asset allocation. So they might look at emissions or how the company reports its climate data. For social, they're looking at certain statistics as to human rights and human capital and what's happening in manufacturing, for example, in factories. And for governance, what's the strength of their board? How's their data being governed in general? I didn't include the name for this scorecard, but this was a real evaluation. And when they looked at all the key performance indicators across these sectors, compared to industry averages, they scored average, and below average again. So this company was actually ineligible to be included in their portfolios because from an ESG perspective, it was too risky. And this was a big American software company. So that was the first layer. And it's probably the least involved layer where it's applying some certain filters, and companies that don't qualify might not necessarily be included within your investment portfolio. The second one, and again, this is an institutional example, but it is screening. And screening is relatively simple and relatively self-explanatory. They do it on a complete exclusion and partial exclusion basis. So for complete exclusion, they refuse to have any of their investments in their funds in automatic or semi-automatic weapons manufacturing for civilian use. So for example, Smith & Wesson brands. They also refuse to have anything in controversial weapons or in tobacco products manufacturing. And those are big companies. So Lockheed Martin, British American Tobacco, these are big companies where if you're invested in a broad-based index, odds are you're going to have some chunk that are in these companies. And I don't know how everyone else feels about semi-automatic weapons for civilians. I personally feel like that maybe is acceptable on a gun range, but not necessarily elsewhere. And so from my personal view, I align with the exclusion of investing in something like a Smith & Wesson that might distribute automatic weapons to civilians for my own investment decisions. Then there's the second layer, which is partial exclusion. So complete exclusion, they have 0% of any portfolio of any investment in companies that engage in those activities. Partial, they cap the amount of income and they cap the percentage of a certain fund of how much they're investing in adjacent areas related to civilian automatic weapons, for example. So something that's distributing the automatic weapons like a Sportsman's Warehouse, something that's perhaps manufacturing weapon systems like Howmet Aerospace, or distributing the tobacco products. They won't completely exclude them, but they will have a pretty high partial exclusion where they're only including, for example, up to 10% of any percentage of a fund. Only 10% can be in any of these three. Again, this is an institutional example, so I'm not saying that this is the way to do it. You have to completely exclude all the companies that are in these types of products, anything that makes semi-automatic weapons or controversial weapons, but it does serve as a pretty effective way to think about a framework. So this is again NEI investment, but from their perspective, this is how they do it. This is how they apply it to their own investment decisions. And then and when you're thinking about your own personal process, might think, okay, what do I really want to exclude? What matters to me to exclude? And then how can I include maybe complete exclusion or partial exclusion to apply to my own personal investments? And the third and most involved layer will be impact investing. So I'd like to actually give the definition as they say it to impact investing. Impact investments are investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. And that's important there, alongside a financial return. So we got to remember, again, that is the first and foremost pillar, is generating financial return. And then a hallmark of impact investing is the commitment of the investor to measure and report the social and environmental performance and progress of the underlying investments. So I like to think about this as having three main pillars. And the first is financial return. So with any of these investment decisions, you're looking to put your money to work and they must seek to generate a positive return. Intention is where this gets a little bit more involved than, let's say, just screening or just ESG, because investments must seek to generate positive social and or environmental impact. So really, it is possible to put your money to work and to feel good about how it's being put to work and what the companies that you're invested in are ultimately achieving. The third pillar here, however, is measurement. So if you're thinking about impact, well, it's all well and good if a company has good impact, but as an investor, all we really see are the metrics and the measurements around the impact. So when a company like NEI has the institutional perspective of how are we measuring the intention, how are we measuring the success of these companies at actually making an impact in the world, well, measurement's really important because it's the main way that they're able to track whether or not the company is in fact succeeding at the impact they're trying to accomplish. So here's an example of, this is the selected fund holdings with impact metrics. So this is the kind of metrics that a company like NEI might look at when they're evaluating the holdings under one large fund. Some examples here include there's 60% revenue from nutritious and healthy frozen foods. It protected almost 40 million customers from cyber attacks. And these are the companies on the left here. So Picard Group, Gen Digital, these are the kinds of companies that are within the portfolio of this certain fund. Or almost 2 billion value covered for patients unable to pay because part of the investment here is Stanford Healthcare. For someone's personal investments, I'm not saying that I expect you to contribute to 2 billion value covered for patients unable to pay. But it's important to look here at these are the kind of metrics they look at. And for you, what kind of metrics would be important for your personal decisions? And how would you take a framework like they're doing at an institutional level and possibly do it at a personal level? And so what does this look like in an investment portfolio? I think it's easy to talk theoretical and lose sight a little bit of the tangible and what this really would look like in someone's portfolio. A lot of times they're impact bonds, so debt issued by issuers with measurable environmental or social outcomes. So the last one, I think a lot of these were debt. So it's the city of Toronto issuing a bond or a treasury, but the goal of the money that they're using when they raise for that bond is reducing GHG emissions. And so then they're tracking here that they reduce GHG emissions. That's one, or impact equity. So companies whose products or services enable environmental or social solutions. So it's a bond fund or an equity fund that you're holding, but the underlying companies and underlying issuers have defined impact they're trying to achieve with either their working capital from equity or with the money that they're raising from the bond. Clean infrastructure, so that's developers, owners, or operators of renewable power and related infrastructure. And then often it's a multi-asset portfolio, so it would be some combination of the three of these. Clean infrastructure is becoming particularly relevant these days because with the boom in AI, a lot of these companies need a ton of power. And it's not necessarily the most sustainable option to go to the conventional uses for those powers. So if you look at a lot of the big tech companies, they're turning towards nuclear power or other sources of green energy that might be able to power these data centers that have huge electricity needs going forward. So process, this is where we take all these kinds of things. So the ESG and the screening and then impact investing, which is the most involved layer, and think about how do we apply these to personal investments and my investment decisions. And that starts with, well, what values and outcomes matter most to me? Because largely a company like NEI Investments or the other fund companies we might use for something like this, we're dealing with stocks and bonds and funds and a lot of the holdings that we usually see in an investment portfolio and private wealth. And for anyone that wants to discuss more about what that might look like in a portfolio, we're happy to chat. But not everyone invests that way. There are other ways to invest. And when you're maybe applying a responsible investing framework, then taking what we would look at here from the NEI investments or from the institutional perspective, and you're thinking, well, what values and outcomes are important? What kind of impact do I want to see from my investments? Do I want to include ESG? Do I want to screen certain companies out or certain types of investments out? Or do I really want everywhere I'm putting my money to have a defined impact? And so if I'm investing, I want to feel good about the goal of the thing that I'm investing in, be that real estate, be that crypto, be that a company that has a good and impactful goal. And then important is how is success measured. So I think it can be a pitfall to want to invest in something impactful and to select your investment there and then to not necessarily know how it's going and know how it's doing. And so almost at the beginning of that process, a key framework that at least we use or the NEI uses is to set KPIs and set metrics so that you can understand how well you are doing towards achieving those metrics, how close to impact you are getting. And so for you, what are the relevant metrics? How are we going to measure them? And then how might you track them going forward? And then possibly the most important one is how does this strategy investment fit my overall financial plan? How does it help me achieve my financial goals? And then how does it align with my values, beliefs, and target impact? So probably the overarching theme of the investment industry for us, especially when we're thinking about regulation, is suitability. Is this investment suitable for the client? Is this investment suitable for the investor? And we think about that primarily from a time horizon and a liquidity and a risk perspective. But then values, beliefs, and target impact is another perspective. So if you don't believe, for example, like I, in certain areas to invest in, then that investment might not be suitable for you because it does not align with your values, with your beliefs, with your moral code, or with the impact you want to have with your investments. So in the same sense that suitability, we always consider it for risk and time horizon, responsible investing might add the one more layer of, okay, does this align with my values and belief system? And that's it for me. There are a couple other arms to responsible investing, a couple other tools in the toolkit, but I would say those are the main ones. And it's nice to go through them from the least involved to the most involved. I'd be happy to stick around for a bit and answer questions. And then for anyone that would like to get in contact with us and talk about what this might look like or ask any questions, we're always open for a conversation.
Amazing. Thank you so much, Sam. That was a really good
Perfect.
presentation.
Yeah, thank you.
Yeah, no, that was really well done. I love what you had to say, like especially about the ESGs, because I didn't really understand it much myself. So it's really great that you're able to like break that down in a way that was like really easy to understand. And really appreciate that. So I'm not sure, we'll leave the floor open here. I don't know, Anna or Heather, like, do you ladies have any questions at all? I know that that was quite a bit of information that he had gone through, but you know, just in case you have any questions, like especially around like impact investing, things like that. Anna, I see that you just unmuted.
Yeah, I'm quite new to this, so I need to research more, find more information.
Mhm.
So thank you for the presentation.
Yeah, of course.
Yeah, appreciate it.
And there's so much in the investment space and in finance. I've pretty much made my peace at this point that there will always be more that I don't know than I do. But what we try to do is focus on a couple niches to specialize in and find the investment strategies that are really best for that niche. And so if ESG or if impact investing is a niche that you decide is really important for you, then that's the kind of direction you might start to want to look into further and maybe get some knowledge around.
Yeah, and like how does that work? Like let's say you're open to new clients. Are there any requirements? What does that look like?
We're always open to new clients. At the private wealth level, it is sometimes a matter of threshold. So we're generally dealing with people with some significant level of assets, but there's no hard minimum. So if anyone would like a conversation, we're always open to talk and go from there.
That's good to know, Sam. I think I saw Michael's hand up as well. I don't know, Michael, do you still have a question there? It's muted on my side.
Sorry, it's also muted on my side. Thank you, Sam. That was very informative. So, from what I hear is that BMO Nesbitt Burns takes the research out of or provides the research for your clients. Now, in the private sector, how does one? Where do you start looking at ESGs and where do you start doing your research if it's outside of the traditional investment landscape or highway? Where do you start?
So this is something that maybe isn't a publicly traded company, and so the information isn't as available, is kind of the idea.
Yeah.
I think where I would start is looking at the metrics. So you have to think, okay, I'm pursuing this private investment. Well, if ESG is important or if impact is important, how am I going to measure whether or not this company qualifies from an ESG perspective or whether it achieves the impact I want from an impact perspective? And what are the key stats, the key metrics that I need to track from either side of those? And if you can't access those for private investment, then you have to consider, okay, well, how much does the ESG or responsible or impact investment matter? But if there's a way that you can push to find the appropriate metrics and start to measure, that's where I would go, because that's the way you can actually see if the company is qualifying from an ESG standpoint or an impact investment standpoint.
Okay, awesome. Thank you.
Amazing. Thank you. Love it. I noticed that Robert just entered the room. Not sure, Robert, if you caught any of that at all, but if you have any questions at all, Sam just finished his presentation. And same with Heather. I'm not sure if you have any questions as well, but we still have a few minutes left in case you wanted to run anything by him while we have him on the phone. But yeah, really good presentation. I'm wondering if we would be able to get that in case and put that into the WhatsApp chat that we have.
I think so. We're a very regulated industry, so as with any distribution of content, I have to check with compliance, but I shouldn't think it's a problem.
Okay, yeah, just let me know. And that way we can pop it into our chat along with all of your details and how anyone can get in touch with you. Also, please feel free to pop it into this chat as well, that people know how to get in touch with you.
Sounds good. I'll do that right now.
Amazing. Thank you so much. Well, if
Thanks
nobody
so much
has,
for
yeah, no, my pleasure. Usually we have a bit more people, but I think with FIFA and everything in the summer that's coming up here, it's like more people are going to be going and checking it out on the YouTube channel, which we have as well. And so, yeah, so thanks so much for coming. As well, just wanted to give everybody kind of a note on what's up and coming as well. We're super, super excited for this next month. We have a few really innovative community leaders that are making a positive impact. So for next week, June 29th, same time, every Monday, we're gonna have a market update with Mehdi, and he's gonna do our mid-year kind of crypto market update. There's a lot of changes happening within the crypto market. And, as we kind of head into that infamous bear market where we have been waiting, he's going to give us some updates on Bitcoin, crypto markets, institutional adoption, kind of emerging trends as well, and what us investors should be looking at for the remaining 2026, what's on the horizon. And then right after that, in the same session, we're going to have Nicholas back, Nicholas Sutherland. He's from ARC Lending, and he's going to teach us all about crypto-backed lending. So that can be, how investors can leverage their digital assets without having to sell them. So that's really interesting, especially when, there's taxation involved. So we can learn about different opportunities, different risks, strategies that are also, rapidly evolving in this space. The week after, we are going to have none other than our Michael Kraus, the founder and CEO of Awaken, who is also on this call right now. He's going to explore a mission-driven venture at the intersection of technology, consciousness, well-being, community, and impact investing. So we're going to discuss conscious entrepreneurship, community building, creator economies, and the future of purpose-driven business. I'm really excited about that. Him and I have been working together for the last few months. And he's been working diligently on something that he's going to share with us. And that's going to be on July the 6th, same time as well. And then July the 13th, that's going to be the founder of Holos. So I have my dear friend and business partner, Ian Michael Hebert, founder of Holos Global in the Diamante Valley conscious community. And it's one of my personal favorite projects that's very dear to my heart, as we all know. And he's, just join us in that intentional space as we explore kind of what communities are being designed for in the future. And this is, really something, as everybody on this call knows, I'm very passionate about community and, creating community and the evolution of Holos in Costa Rica itself, and just the exciting expansion that I'm part of for that expansion here to Canada. So we're going to be discussing everything from the regenerative living, community ownership, conscious development, and how investors can participate in building those communities and really prioritizing the connection and well-being and long-term stewardship of that. And how investors can yield ROI as well, like how it all works and comes together, because we're really on the precipice of something beautiful and amazing, where the wellness tourism industry, as we know, is a booming industry. It's $1 trillion business, and to be at the forefront of that, especially in the intentional community space. A lot of people are going on vacations, but they want to go where they come back feeling better. And so what we're talking about are different communities. And as you know, I've already had my other client from Holistica on. That was for the Italian retreat that we tied up. And actually, side note, if you guys are wanting to get in touch with her, she just launched yesterday a fractional ownership model. So I did want to do a shout out to her and her team. We've been working diligently on getting this fractional ownership model. And so right now you can get in and have a piece of Italian monastery that they're going to be converting. We're converting it into a wellness center and a conscious community intentional space just north of Rome by an hour and a half. And so as opposed to having larger investors in, we decided to open it up to community. It's a community-based endeavor, and fractional ownership seemed to be the route that she'd like to go. So whether you're interested in crypto, alternative lending, conscious business, regenerative communities, or impact investing, which we learned today from Sam, there's something here for everyone in the conscious investing space. We're open. We have our meetings from Mondays at 6 p.m. Pacific Standard Time, and it's open to investors, entrepreneurs, and change makers. So we'd love to see you guys and have you back. And yeah, without that, we're going to sign off. We usually stay a little bit later if anybody wants to kind of chit chat, but we'll end the session right now for the recording session anyways. And then we can kind of chit chat for anyone who wants to chit chat as well. So thank you for everyone for coming today, and we will see you next week. And